Have you ever wondered what separates a seasoned investor from a casual speculator? Welcome to Journey to Rich Mindset, where we navigate the intricate labyrinth of finance to equip you with knowledge for smarter financial choices. Today's discussion revolves around our title, Investment versus Speculation, Making Smart Financial Choices. In the financial world, understanding the difference between investment and speculation is paramount. It's like distinguishing between a compass and a roulette wheel when charting your financial journey. One is driven by careful analysis and long-term planning, the other by chance and quick profits. In the next few minutes, we'll set the stage for a deep dive into these two fascinating concepts. We'll explore the factors that differentiate them and their implications on your financial health. This insightful journey will empower you to confidently navigate the financial landscape and make informed decisions aligning with your goals. By the end of this video, you will have a clear understanding of these two concepts and how they affect your financial decisions. To navigate the world of finance, we must first define our terms. So let's start with investment. Investment is the process of allocating money or resources today, with the expectation of receiving more in the future. It's like planting a seed today and nurturing it over time, anticipating that it will grow into a healthy tree-bearing fruit. Let's take an example to make this concept clear. Suppose you buy shares of a company. You've done your homework, researched the company's performance, and believe in its potential for growth. You're investing your money today with the expectation that the company will prosper and your shares will increase in value over time. This is investment. Now, let's move on to speculation. Speculation, on the other hand, is akin to betting on an uncertain outcome. It's like rolling the dice and hoping for a favorable result. Speculators aim for high returns in a short period, often by taking on substantial risk. To illustrate, let's say you hear a hot tip about a new tech startup. You have no idea about the company's business model, its viability, or its future prospects. Yet, you decide to buy its shares, hoping that the price will shoot up and you can sell for a quick profit. This is speculation. In essence, investment is about long-term growth and wealth creation. It involves careful analysis, patience, and a commitment to weather the ups and downs of the market. Investment is strategic and calculated, with a focus on minimizing risk while maximizing potential returns. Speculation, meanwhile, is about short-term gains and high risk. Speculators often act on emotions, rumors, or trends rather than solid financial analysis. While the potential for rapid returns can be enticing, the risks are high. As the old saying goes, high risk, high reward, but also high risk, high potential for loss. The lines between investment and speculation can sometimes blur, and it's not uncommon for people to confuse the two. But understanding these definitions is crucial for making informed financial decisions. Remember, investing is about planting seeds and nurturing them over time, while speculation is more like rolling the dice and hoping for the best. Now that we've defined investment and speculation, let's delve deeper into their key differences. Scene script. Although investment and speculation might seem similar at first glance, they are fundamentally different in several ways. Firstly, let's consider the element of risk. Investment, by its very nature, involves a level of risk. However, this risk is usually calculated and grounded in solid research and data. For instance, when you invest in a company's stocks, you've likely done your homework. You've looked at the company's financials, its market position, its future prospects, and a whole host of other factors. It's not a guarantee of success, but it's a calculated risk you're willing to take based on informed judgment. Speculation, on the other hand, involves a significantly higher degree of risk. It's akin to gambling, where the odds are often unclear and the potential for loss is high. Speculators might place large bets on an asset's future price movement, often with little to no research to back up their decisions. They're banking on the hope that they'll strike it rich and quickly. While it can be tempting to take a shortcut to wealth, it's important to remember that speculation is a high-risk, high-reward game that can result in significant financial loss. Secondly, the time horizon is another key difference. Investments are typically made with a long-term perspective. Investors usually hold on to their assets for years or even decades, allowing their investments to grow and compound over time. This is the power of patience and the magic of compounding, where your wealth grows exponentially over the long haul. Speculators, conversely, are short-term players. They're looking for quick profits in a matter of days, weeks, or months. They're not interested in the long-term growth of a company or an asset. Instead, they're focused on short-term price fluctuations and quick gains. But remember, the shorter the time frame, the less predictable the outcome. Thirdly, the amount of research involved also distinguishes investment from speculation. As we've mentioned, investment decisions are usually based on thorough research and analysis. Investors spend time studying market trends, understanding economic indicators, and analyzing company financials. They make informed decisions based on facts, not feelings. Speculators, though, often base their decisions on market rumors, hype, or their personal hunches. The research is often minimal and decisions are made quickly in the hope of making a fast buck. This lack of due diligence can lead to ill-informed decisions and potential financial loss. In conclusion, while both investment and speculation involve putting your money to work in the hope of generating a return, the methods, risks, and timeframes involved are vastly different. Investment is about patience, research, and calculated risk. It's a long-term strategy aimed at building sustainable wealth. Speculation, in contrast, is about quick profits, high risk, and short-term gains. It's a game of chance that can pay off big, but can just as easily lead to significant losses. Recognizing these differences is crucial to making smart financial choices. Understanding whether you're an investor or a speculator can help you align your financial strategies with your risk tolerance, financial goals, and time horizon. So, the next time you're about to make a financial decision, ask yourself, am I investing or speculating? Your answer could make a world of difference to your financial future. Risk is a common factor in both investment and speculation, but how we manage it can make all the difference. Now let's dive into the role of risk in investment and speculation. In the financial world, risk refers to the potential for loss. It's the uncertainty that the actual return on an investment may not align with the expected return. But remember, with risk also comes the potential for reward. In investment, risk is typically managed through a strategic approach. Investors tend to diversify their portfolio, spreading their investments across a variety of assets. This way, if one asset performs poorly, others may perform well, offsetting the loss. Also, investors generally focus on long-term growth. They understand that markets fluctuate and are patient enough to ride out the lows in anticipation of the highs. On the other hand, speculation involves a much higher level of risk. Speculators aim to make quick profits from short-term price fluctuations. They might put a significant portion of their money into a single asset, betting on its price to skyrocket. While this can lead to high returns if the bet pays off, it can also lead to substantial losses if the bet goes wrong. The key to managing risk in both investment and speculation lies in understanding your own risk tolerance. It's about knowing how much risk you're comfortable taking on and making decisions accordingly. For some, the thrill of speculation and the potential for high returns is worth the risk. For others, the steady and more predictable growth of long-term investments is more appealing. Whether you're an investor or a speculator, it's crucial to remember that risk is an inherent part of the financial landscape. It's not something to be feared, but rather something to be managed and understood. And let's not forget, no matter what your financial strategy, always do your research. Knowing what you're putting your money into is one of the best ways to mitigate risk. Understanding and managing risk is a key part of both investing and speculating. So, how can you use this knowledge to make smarter financial choices? We've journeyed through the differences between investment and speculation, explored the role of risk, and now let's focus on applying this understanding to your financial journey. Whether you're a seasoned investor or just starting out, these tips will help you make informed decisions that align with your long-term financial goals. Firstly, let's talk about assessing opportunities. When faced with a potential investment or speculation, it's essential to do your homework. For investments, this could mean analyzing a company's financial health, its management, competitive positioning, and industry trends. For speculation, it might involve understanding the market dynamics and sentiment that could influence short-term price movements. Remember, an informed decision is often a better decision. Even if you're speculating, it's not about making wild guesses but making educated predictions based on available information. Secondly, diversify your portfolio. This age-old wisdom still holds. By spreading your resources across different types of assets, you can cushion the impact if one of them goes south. Investments and speculations can both have a place in a diversified portfolio, but their proportions might vary based on your risk tolerance, financial goals, and investment horizon. Next, let's touch on the importance of having a plan. A well-thought-out investment plan can serve as your compass, guiding you towards your financial goals while helping you stay grounded during market turbulence. Speculation, on the other hand, requires a different kind of plan, one that involves setting clear boundaries for potential losses and knowing when to exit. As we move forward, remember to stay patient and disciplined. Investment is a marathon, not a sprint. It requires patience and discipline to stick to your plan, even when things don't seem to be going your way. In speculation, discipline involves not getting carried away by market hype or panic, and making decisions based on reason, not emotion. Finally, never stop learning. The world of finance is complex and ever-evolving. Staying informed and continually refining your knowledge can help you make better decisions over time. Read widely, listen to different viewpoints, and don't be afraid to ask questions. Remember, making smart financial choices is not just about picking the right stocks or timing the market perfectly. It's about understanding your financial goals, assessing your risk tolerance, and making informed decisions that align with your long-term plans. It's about recognizing the difference between investment and speculation, knowing when to use each, and managing the inherent risks. With this knowledge, you're now better equipped to navigate the financial landscape and make informed decisions. So, let's take these insights and apply them on our journey to a rich mindset. After all, the journey to financial wisdom is a marathon, not a sprint. Let's run it wisely. To sum up, understanding the difference between investment and speculation is essential to making smart financial choices. We've embarked on a journey through the intricate world of finance, dissecting the nuances that separate investment from speculation. We've defined investment as a calculated financial move, backed by analysis and an understanding of the inherent risks and potential returns. It's a strategic approach to wealth creation, where patience and long-term planning are key. In contrast, speculation is akin to a high-stakes gamble, driven by market trends and short-term price fluctuations, often fueled by emotions rather than sound financial judgment. We've underscored the crucial role risk plays in both investment and speculation. While both involve a degree of risk, speculation tends to have a higher risk factor due to its reliance on volatile market conditions. Conversely, investment, with its foundation in research and analysis, typically presents a lower risk profile. We've reiterated the importance of making smart financial choices, taking into account your financial goals, risk tolerance, and investment horizon. Recognizing the difference between investment and speculation is crucial to developing a strategy that aligns with your financial objectives and risk appetite. It empowers you to avoid common pitfalls and make informed decisions that can secure your financial future. Remember, knowledge is power. The more you understand about investment and speculation, the better equipped you'll be to navigate the financial landscape. Whether you're a seasoned investor refining your knowledge or a beginner eager to kickstart your financial journey, the wisdom gained from comprehending these concepts can be transformative. In the end, it's not just about growing your wealth, but cultivating a rich mindset. It's about understanding the mechanics of finance, harnessing this knowledge, and using it to make smart, informed decisions that align with your long-term financial goals. Remember, the journey to a rich mindset begins with understanding. Keep learning, keep growing, and you'll be on your way to financial success.